the price is misdirecting everyone into believing that gold and silver are not a place to be. Yet the biggest money in the world is draining the supply. It's it's counter to the argument, and it's counter to the price. So look, not only that, we're seeing more and more and more countries moving away from the dollar, and the places that they will go will be to gold and silver. You know, when you realize what gives the dollar its status worldwide is the fact that everyone for the last 50 years has had to buy dollars in order to, or stockpile them in order to purchase oil. And so when the break from that type of ideology, where countries are able to break away from using dollars and use things such as their local currency, like in the case of Russia and China, or in the case of Nigeria, selling their oil to the Chinese for the petro yuan bond. We're seeing all of these arrangements that are happening faster and faster and faster, that, again, in and of themselves aren't as relevant as the cumulative combination of all of these countries that are forming a very formidable force all against the Western hegemony. Now, it's important to realize that central banks are holding more gold right now than at any time since 1975. And they have most of this gold held in something called a revaluation account, a GRA, a gold revaluation account. And it's basically an accounting item that records the unrealized gains of a central bank's gold. In other words, they are not allowed to offset the gold on their account with liabilities on their balance sheet. And most of the gold, because in Europe's case was accumulated during the Bretton Woods era, is on their books at $35 an ounce. In the US, I believe it's $42.22 an ounce, and in their GRA account. And so you're talking well below the market value. So the governor of the Dutch central bank came out just the other day in a television interview, and he said, look, the gold within the revaluation account ensures the solvency of the central bank. And the reason he was talking about it was because all of these central banks in the West included have used the manipulation of interest rates and the easy money to buy their crappy bonds. And so they go in and they are actually buying their bonds and expanding their balance sheet. And when you talk about long-term commitments, so they have bonds that they bought that are long duration, let's say 30 years at 2.5% on average, versus short-term obligations of, like in the case of the Federal Reserve, having to back the deposits by the commercial banks at 4 or 5%, it is setting up for a real problem with their balance sheet. All of these countries, when you look at what's happening to interest rates and bond prices, they're becoming insolvent. And so what the Dutch finance minister is basically saying is we need to revalue the gold that is held at $35 an ounce in Europe and $42 here in the States, and value it at a level that makes the balance sheet solvent. In other words, where the liabilities and the assets find some sort of a unity. Where right now the gold is valued so unbelievably low, they're not able to do that. My feeling is they wouldn't stop at $1,800 where we are right now. How about 5,000? How about 10,000? And peg it to a new floor. Right. Remember, it is a tier one reserve asset. Remember, central banks own more gold than at any time since 1975. So the banks are accumulating gold because why? Because it was reclassified tier one. So they're all buying gold and they all have a position in it. Even the small countries, we can talk about that in a moment. The small countries are massively accumulating gold. And when you look at what's going on, like even looking at if you go to the websites of the German National Bank, the Bundesbank, of the Dutch National Bank, of the Polish National Bank, of the France, I'll read you a couple comments that are actually on these central banks. And the German central bank says when they repatriated their gold, it was done for cost efficiency, security, and liquidity. In Poland, they say that they recently on their website have disclosed that their gold bars adhere to London good delivery standards. Why would they say that? Because it's important that all of these bars be London Good Delivery 24 karat in purity, so they all have the ability to trade in this new system, which they are almost but telling you is going to have gold backing to it. I'm going to read some of the countries that are in this BRICS Plus ecosystem who are now being targeted and invited to join. You have Argentina in Latin America. You have Nicaragua in Central America. You have Algeria, Egypt, Iran. We talked about Saudi Arabia, the United Arab Emirates, Nigeria, and Senegal in South Africa. You have Afghanistan, Kazakhstan in Russia. In Central Asia, you have India, Indonesia, and Thailand. In Southeast Asia, you have these countries that are all joining together, and all of them are massively accumulating commodities. This is gold holdings as a percentage of reserves. Venezuela, 82%. Uzbekistan, 65%. Kazakhstan, 63%. Bolivia, 55%. Belarus, 40%. Turkey, 29%. Pakistan, 29%. These are all the countries that want to join or are being invited or have expressed interest. What are they doing with their money? They are stockpiling commodities, and in particular gold. So when you see the price of gold and silver not reacting the way we really think it should, yet these countries massively accumulating it, and this drive away from the dollar, it's all being suppressed on COMEX and on the London Metals Exchange and being delivered to these countries who are going to use it to provide an equal footing at the table on the new BRICS currency system. And I really do believe that this is why you are going to see ultimately, to the people who say you can still buy it, fine. It's never been so hard to get, but just wait. Just wait until it becomes quite obvious that the only way that you have a seat at the table is to accumulate all these precious metals. So if you are one of these countries, you have a vested interest in accumulating it as fast as you can, but not letting the price rise too fast. And they are all using suppression of the paper markets to accumulate the physicals and give themselves equal footing at a table where you will be listened to by the amount of what you're bringing to the table. Instead of, like in the United Nations, one country having more weight over another, like the United States, these countries will all use commodities to peg their place at the table so that everyone has equal footing in what will be a massive coalition against the Western hegemony. And you can see it. It's all centering around gold and silver and other commodities. It's just the beginning, man. It is just the beginning. So to those people out there who say you can still get it, great. We can still sell it to you too. What will put you out of business before anything else? It would be the inability to source product. It would be the only thing that I could think of long before the government say gold and silver are illegal. You won't be able to find it in this country.